Hi guys, thanks for joining us. I'm Hannah Perkey, CEO of Evelo team. I'm here with Bob Woerner, and we are here to present monthly market updates. So to let you know what's going on in the real estate market this month. So I will let you just start off, Bob, with your first set of data here.
Yeah, let's just get started. So we've been doing this for quite a while now. Just always good to bring the latest each month. So our first slide up is that median sales price for our market. So that ended the month of November at 299,450, which was up about 5% year over year. So we seem to have settled back into our kind of more normal, like 3 to 6% growth rate each year. So pretty consistent across the board this year for that. Next up is that average days on market, or median days on market, I should say. Again, we've been seeing that creep up, and we've been tracking that and some other things that are related to that each month. So we ended the month at 19, which was up about 26% from last year. But again, that's only up from 15 days. So that percentage looks a little bigger than reality. That month supply of inventory. So again, historically, a balanced market has been about a 5 to 6 month supply of inventory. There's been a lot of talk that, in the new normal, so to speak, maybe that'll become more like a 3 to 4 month supply of inventory for us to kind of be considered balanced or normal. So we've been seeing that creep up all year. We ended at the end of November with 2.3 months after spending a bulk of the year at around 1 month to 1.5 months supply, and the years prior to that even under 1 month. So it's pretty comparable to where we were last year, at 2.1 months of inventory. And then the last one in this first batch here is just that average percent of list price received. So again, we spent some time in 2020, 2021 where virtually everything was above 100%. We've settled back down more into the 98, 99 range for the last couple of calendar years, ended November at 97.9% on average for list price received.
So I'll get on to our next set question, but on those stats about the 2.3 months of inventory. So, Bob, for a typical seller, and I know it varies based on price, location, what should they, if we're setting the expectation, what should they expect then when their house goes on the market? What would you be telling someone in a listing appointment?
Yeah, so we're definitely seeing that increase, right? And there's a lot of just changes in general, but I'm definitely suggesting that people be prepared for more like that. 30 to 60 days is definitely not uncommon right now,
Mhm.
where not so long ago, in most cases, again, there's always a lot of variables. I would have probably been telling people 1 to 3 weeks at most. So
Mhm.
I tell people a lot when I started in 2013, the average days on market was 100. We're still at 19, so we're still significantly different from there. But that is a pretty big shift from, a lot of homes selling within the first weekend to homes being back on the market 30, 45, 60 days, and in some cases longer. That's a big difference for sure.
Yeah, yeah. And I think we're always living in it as realtors, but for sellers, if you're considering selling, just to kind of think through that timeline and what that looks like. All right, so on that, continually talking about the shifting market, what are some other things you've been tracking with the shifting market?
Yeah, so we started tracking just a few other things to break down as well. The first one up is that active inventory. So where the month ended with active listings, we were at 5,504. That was up about 10% over last year. And for the last few months, that's the first time we had been above 5,000 active units again. So we're continuing to see that number increase a little bit. That obviously contributes to the month supply of inventory and the longer days on market, right? The more homes we have active on the market, that generally means they're also on the market longer. And so we're seeing those things correlate for sure. This one was a little interesting to me because even though we have more inventory, more month supply of inventory as well, we ended closed sales for the month of November at 2,430, which was almost identical to where we ended last November at just over 24 units total difference. So I found that one pretty interesting. And similarly, we sold 2,400 units. We had 2,400, almost 2,500 new units come on the market or new listings. So that was very similar to where we were last year as well. So those two numbers are almost identical to where we were last year, which is a little bit different than we sometimes see.
Yeah.
And then the last slide in this batch, we kind of look at that average list to sales price ratio, again, fluctuating just under 98% on average. But we also like to do is look at the number of listings that are still selling for over list price. And we came in just a tick under 16% for the month, which was again pretty flat compared to where we were last year. And again, if we go back to 2020, 2021, we saw 50+% of the listings selling for over list price. So that's been a pretty big decrease. I think that things are still relatively close to list price in a lot of cases. But definitely I have seen more breathing room in terms of what that might look like than what we've seen over the last couple calendar years.
Yeah, what a huge difference. I mean, some of those numbers were up at the 50% over list price. So I think as a buyer looking at your opportunity to get into a home, it's a little less maybe intimidating, especially if
Absolutely.
you're working with a mortgage and competing against other buyers. So, okay. All right, people always ask about interest rates. So tell us where interest rates stand today or this month.
Yep. So for the week ending last week, that national average was at 6.69. When we did this presentation last month, we were at 6.79. So just a tenth of a point less than where we were. We seem to have kind of settled into that broader range of 6.5 to 6.75, 6.85 in that neck of the woods. We had, been down earlier this calendar year, like January, February, March. Then we went up to over 7% again, and now the market has seemed to settle back down into this pace.
Gotcha. All right. Any final thoughts on our
Yeah,
stats today?
absolutely. I'm going to kind of continue on that interest rate trend. So as we end up Q4 here in just a couple weeks, it seems that there's always these mortgage rate projections for the next calendar year. One of the sources we use for content, they kind of go out and survey 3 different organizations. You can see that here, and then they kind of break it down by quarter of where they predict the interest rates might land. Again, I always tell potential clients that I'm meeting with, I don't have a crystal ball any more than anyone else. But these folks out here, while they don't have a crystal ball, they're a little bit more into it on a day to day and have some sense of where rates might go. And you'll see that basically they're predicting things to not change much, right? From Q4, which is where we're at now, their estimate was 6.67. You saw that we ended last week at 6.69. So that's pretty spot on. But then even moving a year from now, they're only projecting 6.33. So over the course of the year, they're only projecting a fluctuation of about 0.3%. I think a couple things that indicates, right? They're expecting a little bit more stabilization, maybe not quite as erratic as rates have been up and down the last 2 calendar years throughout the course of the year. Certainly, there's going to be economic indicators, inflation, jobs, unemployment, et cetera, that all impact those things. And maybe we see spikes and downward trends over the course of the year within each of those quarters. But again, if you've been waiting on the sidelines for interest rates to drop, it doesn't appear that anytime in the near future we're going to see anything in the 4s and 5s again. So as home prices keep appreciating, if you've been sitting on the sideline, you're probably losing out on those opportunities because this is definitely the new norm, at least for the next year. And from there, we can't predict much further than that.
So stop it, is what Bob's saying. Let's
Yeah,
go. Yeah,
time to
that's the
buy.
truth, right? Yep. Yep. Marry the house, date the rate because it might change a little bit, but it sounds like not enough to make up the difference of if you're paying rent and not creating that equity. All right, awesome. Well, thank you for getting all of that together. I think that's always helpful to know, even on the side where we're in the business all the time. It's so great to have the facts for you guys as we go in and act as that expert for you. So I hope that is valuable. If you have any questions, you can throw it in the comments below and we'll get back with you. And we'll be back next month with more data for you. So we hope you all have a great Christmas and holiday season, and we'll see you in 30 days. Thanks so much. Bye bye.